Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Her website, jugglingdynamite.com. Welcome back to the show, Danielle.
Hey, Jim.
Danielle, one of the headlines from your blog that caught my eye, predatory finance models preying on the weak. What's that all about?
Wow. Well, there's so many of them. We are living in this really amazing time, Jim. It's mind-boggling of the runaway fraud that's rampant through corporations, through lax regulation, through investor apathy, speculative fever. People are basically doing no math, looking at nothing, and just buying on, the dream that things will always go up. And I think that's really created probably the most extreme financial climate of my lifetime, for sure, and certainly of my entire career, which started in the 90s. So, I have to say it's amazing. The story that I was writing about there is the irony of Robinhood, which of course is this online trading app which came out in the last couple of years and really became so popular with the young people in particular. It's really people that the founders worked at HFT firms, high frequency trading firms, in the past in writing the algorithms, so they understand exactly how high frequency trading firms make or use the order flow of regular customers to make themselves profits by front running and scalping these transactions. So this has been a practice that I've spoke about for the last decade, because mainstream broker-dealers all began, in the race to charge people nothing for their transactions. They all adopted this other model, which was much more covert, which was instead of charging you a fee up front or a higher fee up front, they, charged very little for the transaction, the buy and the sell, and instead sold your flow to these high-frequency traders who were equipped with these rapid-fire computers. This is the Flash Boy story that Michael Lewis was writing about in 2008-9, but it has gotten so much worse in the past few years as technology has advanced and the speed of transactions just continues to escalate. And what happens is that most of the broker-dealers began selling their flow and being paid a big percentage of their revenue each quarter from these high-frequency trading firms, such as Citadel, for example, where Ben Bernanke actually went to be an advisor when he left the Federal Reserve as the chair. So it's this revolving door of the people who set up these predatory algorithms, using them to use and abuse regular people trying to invest in the market. That includes pension funds. These are not just little people are abused in this approach, but also the more institutional traders. The difference really is that Robinhood is this next iteration of it, right, where the people who devised the algorithms for the HFT then go out and ironically design this app which people can have on their phones. I say ironically because they call it Robin Hood, right, which is that great mythology of stealing from the rich to give to the poor in that folklore of that story. And in fact, they're doing the exact opposite, right? They're stealing from the little and unsuspecting person to scalp profits for the HFT firms. And so they've been raising a lot of money in the last, especially in the last year, as people were housebound, in the COVID shutdown, and they began sort of using whatever government stimulus money was given to them in their spare time gaming gaming, gambling, and various things that people were doing before were shut down. Casinos were closed. So everyone sort of took their addictive behavior online and really doubled down on these apps. So it's a story of extreme excess, where the Robinhood has been able to raise enormous amounts of money, and then be paid a fortune from these HFT firms for selling this customer order flow. Not only that, they sell, levered loans, they sell options, which is there's a huge amount of premium built in there, and the predatory traders will pay an even premium for the Robinhood crowd's trades because they are considered to be the dumbest of the dumb. And so they're even more easy to use and abuse and profit from than the institutional trades. So here we have this model where, people are thinking they're being taught to do something to make money, like as if they're being given some inside scoop or someone's looking after them, when in fact it's the exact opposite. They are being used and abused in the process. So as long as they are trading and thinking they're making money, right, they will think they don't care about this, if what they're buying has gone up. And in this environment, let's face it, since March, basically everything has gone up. The good, the bad, and the ugly has gone up incredible amounts. On the QE flows, the government stimulus, the central bank stimulus. Today the ECB announced it's going to add another $500 billion to its emergency asset buying program. It also said it was going to extend doing this for 2 years, all the way till March of 2022. Excuse me, not 2 years, but say a year and a quarter. So they're intending to keep this up all through 2021 and into 2022. And so everyone's really just hook, line, and sinker decided that nothing will ever go down again, that valuations are irrelevant, that the government and the central banks have got your back. And of course, this is an extremely tenuous situation for people, especially when they're doing it on record amounts of leverage and personally indebted. And they really haven't got a clue. There was an interesting, there was a WFC fighter who's does online trading as well, and he tweeted something a couple of days ago just to say to people, look, I know you think you know what you're doing. I know you think you're really smart, but actually you haven't got a clue what you're doing. So pay off your debt if you're up. Take some profits, pay off your debt, for heaven's sake. Don't do it on loans or leverage, because, you think you're up and then all of a sudden you lose everything and more, when you're in a levered position. So it's just a Wild West casino. And, we see it in every metric that we look at right now. It's mind-boggling. Like for example, the global market cap this week. This isn't just American stocks that are trading at all-time highs, in terms of every valuation metric that's been historically reliable through, a couple of hundred years of data. But the global market went to 100 trillion this week because all the inflows are happening, around the world. So you're looking at global GDP, Jim, which in 2019, before the pandemic, was about 85 trillion, and it's dropped to something like 81 trillion this year, during the recession. So we're trading on a global stocks to GDP basis about 1.23 times as a multiple. The U.S. market is trading 1.8 times. The Canadian market, Jim, is trading over 2 times the market cap. So this is the price of all the shares times the number of shares, okay, that value times the size of our entire economic output. We're talking about a stock market in Canada that is over 2 times more valued than our overall economy. Like, this is just mind-bogglingly dangerous conditions. And it's not just the stock market. The junkiest corporate debt that's out there. Corporations have added on more corporate debt than any other time in history. The junkiest of those companies, the ones that are most vulnerable to insolvency problems or not paying their debt payments, are trading at all-time highs, that debt, so that the yields on the paper for the people that are buying it are at all-time lows, just as the balance sheets are the weakest they've ever been. Even government bonds, the global sovereign bond market, this week, $18 trillion of bonds were trading at negative yields, where they were yielding less So you buy it, and it's going to mature at less than you paid for it, and you're going to make negative yield over the entire holding period. So it's really every asset class, and it just, none of that tells us when the bubble will burst, but it does tell us that we are in a bubble, and we know for sure that every bubble in history has always burst. So now we've got this multi-asset class issue, as well as housing in Canada, right? For example, the Canadian housing market, the U.S. housing market's been very strong this year as well. And then you hear people saying things like, the housing market has added, billions of dollars to household wealth. Well, it's only increased their wealth if they're able to sell that shelter after it's gone up, buy themselves a cheaper shelter and bank some cash as savings. That's how you would make wealth in this kind of an environment, but having your shelter just become more and more expensive doesn't actually add to your net in terms of your ability to consume or spend or actually have net equity. So it's a very crazy time.
We'll have more with Danielle Park right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Danielle Park. Speaking of the golden age of fraud, one of the things you mentioned was the electric truck firm Nikola. Is there anything there for you to invest in?
Well, if you're a short seller, which you need to be a very particular kind of setup in order to be a short seller, you have to be typically extremely wealthy with no debt whatsoever and tons of cash that you can afford to risk. But certainly they're on the short side, and people like Jim Chanos is, for example, Kinnico's Investments is one of the people who has made bets over the years on companies where they see fraud in the actual financial statements. So some of it is actual fraud and some of it is what would be considered almost legal fraud. So in other words, they're doing everything according to their financial rules. They're allowed to do these things on a reporting basis, but ultimately they're hiding a lot of things. And investors in this environment, and that's something that Chanos mentions, but also, Harry Markopoulos, who I've had a clips on the blog in the last while, he famously found the Bernie Madoff fraud, of course, and reported it for 10 years to the various regulatory agencies before he could get anyone to actually look at it and pay attention, and then it was revealed to be the largest fraud of all time at that point. He was also talking about the fact that there's so much fraud right now and so many incidents of companies that one could short on the thesis that they're trading on ridiculous prices that have nothing to do with the reality of their business, that they literally, they've never seen so much opportunity on the short side. So that's the kind of environment we're in where, not just companies like Tesla, which actually have an excellent product, but are still trading, have increased 800 times in the last, year in terms of their price. Again, because people are not connecting anything in terms of the math of the underlying business and revenue and profit with the price of the share. They're just seeing it as a gambling proposition. So, anyway, at least Tesla has a product. This reminds me very much of the 2000s where anyone with a .com could just stick .com on their name and suddenly people would be bidding billions of dollars for their company even if they had no revenue or no net income at all. This is the type of thing it is. So anyone that's come out with anything that sounds like an EV product or even an intention to build an EV product, in the case of the Nikola company, they just have to use a name that sounds like EVs and suddenly they're being bid through the stratosphere. it's interesting. Canada doesn't have a lot of information technology in our TSX sector. It's not a big weight, but we have Shopify, which in this environment, Shopify is now the largest market cap company in Canada's TSX at $1.6 billion. It was actually, it's an online retail platform software to help merchants manage inventories and sales and all that sort of thing. So it's in the space, in the right space at this time. It was only founded 16 years ago, and its current organization is about 10 years old. But it has been bid up, 300 times since the March lows. After it lost 36% in the sell-off, where everything sold off as the U.S. dollar rose, Shopify has tripled since then. Again, nothing to do with the actual business of the metrics or anything rational in terms of valuation, just this it's in that technology-centric space, let's bid it up. And it itself has now contributed over 500 points to the TSX rally. The TSX is up 388 points year to date, roughly about now. 500 points of that came from Shopify. So without that, the TSX would be actually negative year to date. So all that sounds maybe great, except when you realize that these bubbling companies are now such large weights in the funds and ETFs and indices in which everyone else is trying to mirror. And so as we've seen at other incredibly high market tops, secular peaks in 2000, for example, the cycle top in 2007-8, then when these things mean revert, when the bubbles burst, they also blow huge chunks out of the, even the non-concentrated, even the, things people think of as a basket of a whole bunch of companies. Because they've become so heavily weighted and overvalued, it does a lot of damage across the board. So, whatever the theme is today, in terms of risk taking, you're just seeing, completely irrational, greed-driven, trade, and a lot of it, frankly, from people who have very little. This is the retail crowd, which we've seen come in finally. They left in the bottom of 2002-3. They didn't come back for several years because they were so hurt by their losses. They start gambling again from about 2006 into 2008. They lost their shirt. And then you see the same thing this cycle where they lost so much in 2008-9. They leave for a few years, and they weren't really in the picture until the last year in particular, when, again, as they say, this confluence of free time and free money really went into fuel the final gas on the fire of this speculative episode. So that's where we're at. Airbnb went public today. $68 was its IPO price. Just an FYI, IPOs are typically priced at a very rich multiple because they're heavily sold by the underwriters. So the story is usually really ramped up. They sell it to the public. It's quite common for IPOs to be heavily oversubscribed and then to lose money in the year that follows. Today we saw Airbnb jump about 120% from its issue price just in one day. At DoorDash, that software that delivers, that you can order food to your home, and they take 30% off of the restaurants actually creating the food. And in Ontario, that was actually capped at 15% because during the pandemic it was considered so egregious to be doing this to local businesses. That IPO came out on Wednesday at 102 and closed up 86% in one day. So the message of the story is that there are a lot of people that are gambling right now, doing really crazy things with money. Yes, some of them are winning in the short run, but again, the studies show that this is very much luck-based. It's not a skill-based. It's not a rational-based preoccupation. It's the same thing as basically playing the craps tables or, playing some kind of poker game. Eventually the house wins. Eventually the weak money loses, and very often they end up further behind where they started.
We'll have more with Danielle Park right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, the federal government has told the airlines asking for bailouts they're not going to give them a penny unless they refund canceled flights to their passengers. WestJet seems to be okay with that. Air Canada is still saying no way, Jose. Should there be conditions attached to government aid?
Absolutely. And not just a condition as basic as refunds to people who have booked flights, but they should really be tying the sustainability of the sector itself to any bailout money. So an interesting report came out this week, Jim. I don't know if you caught it from the PBO office that pointed out that Canada is not going to be able to attain its Paris Accord emission reductions, which the government, by the way, has said they're going to do, are not going to be able to achieve them if we continue to develop the Trans-Canada Pipeline, as an example, of which, of course, we know the government has already heavily spent taxpayer dollars to acquire, and in the last year another some $13 billion or something in its development. So here we have a government that is handing out taxpayer dollars, and we are actually going to be further indebted. We are massively indebted already, but we're not improving our efficiency or future growth prospects in this process. We're actually making it worse. So we're going to have to cut in a whole bunch of other areas. We're going to suffer the consequences of catastrophic weather impacts and all the bad stuff that goes with not capping our emissions at the Paris Accord levels. And this is the same thing with the aviation industry. It was unsustainable in its form before COVID, and now it's looking for a bailout. Okay, so we want obviously to have aviation. We want to have flights in the world, but we need to really migrate to things like the fuel cells, other technologies that'll help, hydrogen fuel cells, other technologies that will help us to achieve growth and support in that industry, but also, and jobs and manufacturing and opportunities to come, but also be sustainable in the long run. So this is the same thing, when we bailed out the auto industries, the government's bailed them out a couple of times in my adult life, the last time being in 2008. And of course, there was no connection there with increased emissions controls and or the migration to EVs. If they'd have connected that taxpayer bailout to the requirement to retool, we would have had a North American auto industry that's far ahead of where it is today in terms of that transition to non-emission vehicles. So that's just another example. If, we have this mentality that governments will continue to bail out everybody under the sun, including the antiquated models, including the self-destructive practices. And this, we just can't afford to do this because it's just creating more and more cost in the future, which we have, all the debt that's being added to the system today on governments, on corporations at every level just slows the future growth and our ability to spend and invest then because of the carrying costs. So the only way that we're going to get ahead here is if the money that we're spending now for stimulus is connected to improved efficiency, job creation for the future, right? Transitioning to the new world economy. That's the only way this is going to make any sense. Otherwise, we just keep throwing on debt to be further and further behind.
Are people who have, say, taken their CERB money and got into day trading, are they eventually going to run into trouble?
Well, statistically, the amount of people who end up actually net positive after that pursuit is like tiny single digits. And typically those are the ones who actually sell. It's like if you get a winning lottery ticket. Everyone in their right mind knows that if your numbers come up on a ticket, you cash it out, right? you have to take it to the store and get your cash for it. Otherwise, you didn't actually net anything. Well, the same thing happens with this kind of trading activity. Unfortunately, most people, it's a very slippery slope, and there's many studies in terms of the mental health impacts of this kind of behavior, but people become so obsessed, compulsive, addicted, convinced of their own genius that they typically don't cash out. They keep playing as if they're at the roulette table and they can't take their chips and go home. So ultimately, because of that, and because this whole belief that the central banks will never let anybody lose money is absolutely farcical, because they don't actually have the power to protect and bail out everyone. Lord knows they've been trying, for sure, and they've encouraged all sorts of very destructive practices and behaviors, but people who don't want to be sucked into the madness of crowds, you don't have to lose your head just because others are. And you pull back and you look at the data and say, okay, there has never been an episode like this in history where it has not collapsed. And we're talking about 50 to 80% collapse and many people going bankrupt and businesses going bankrupt, not just share prices of publicly traded companies collapsing. We're talking about a lot of weak players actually going bankrupt in this process. That has always been the outcome. So if you're betting, if you're at the table and you've won some, take the advice from the WFC fighter and cash out, or at least pay down your debt, at least reduce your leverage, at least only play with winnings at this point, because you have to appreciate the kind of odds that are against you.
Yeah, I know. Casinos hate players like me. As soon as I win anything decent, I stop. I don't say to myself, this is my lucky day, I better keep gambling. But most people don't.
Well, that's the thing. And, there was NPR has had a series recently of interviews with people who have been day traders, who have thought that they were making a fortune, were up huge at certain points. And again, didn't cash out, in fact, continued to play, and were enticed by things like these Robinhood apps, which, really, if the social media platforms target our monkey brain and try and incite us to certain behaviors, they're using the same technology in these trading apps and online trading platforms. What they really want is for you to continue to transact so they can continue to sell your flow and they can cash out and make a fortune on your behavior. That's what the whole system is designed to do. So the only way the individual can really equip themselves against that is to develop their own personal discipline around when and what they're prepared to risk, or what they're looking for, what their goal is, what their longer term plan is. And so, as I say, that there's the upside of this for anyone that's trying not to lose their mind and go in with the madness of crowds, is to say every single episode like this has ended in the same way. We don't know exactly when this will end, but we do know that those with cash who don't lose, who have the liquidity saved and stashed to the side, who have paid down their debt, will be in a position of power, a rare position of power, frankly, because the masses don't do this. And you'll be one of the few who is able to actually take advantage of things after prices have dropped, right? So just one more example is, I was speaking about RioCan recently, because RioCan is a much-loved real estate investment trust that's been in Canada for a long time, and it has been paying out, regular dividends to shareholders, so everyone's loved it in the low-rate environment. The problem is that, of course, they're in the real estate space, right? The commercial real estate space in particular. And so the CEO came out last week and had to cut the dividend because they're in a very challenging environment. That's what responsible management has to do in a challenging environment, is conserve cash flow. They have to lower leverage. So what they've done is cut the payout by 37% in order to keep their cash and try and reorganize their business model for these challenging conditions. Well, of course, the share plunged in the process, because once you cut the dividend, the people that have bought it for the dividend, sell it because they're upset with you that you've cut their income stream. So this is the very definition of risk, right? And it's the reason why equities are nothing like GICs or government bonds that are guaranteed to mature at a certain price or a certain amment that you put in, and also will pay you your interest. It's contractually prescribed to pay your interest every 6 months. These REITs and dividend-paying stuff are nothing like that. There's no guarantee to get your money back. There's no due date, and there's no contractually prescribed amount of income they have to give you. It's all within the discretion of management. And this is the way these products work. So RioCan shares plunge after the dividend cut, and they don't just give back a year of growth, Jim. They are, down now. They have had a negative return for the last 5 years. So this is what happens. It's not just a question of, it goes down a little bit. It goes down enough to wipe out all the progress that people thought they'd made in terms of price appreciation for 5 years. And longer, actually. It's negative 26% over the last 5 years. So this is what these cycles do. When people become overzealous, buy things looking for income or quick price appreciation and not paying any attention, having no skill around the financial aspects of it, they end up, typically they can win and then they lose big. And it's the loss that really is the lasting blow, because it takes forever to grow back money, and typically people don't have enough time in their lifespan to wait and grow that back again. And that's particularly the case for people that are in their 50s and 60s today. They just don't have the appetite or ability to lose a chunk and then not get the income and growth back for many years. Typically they'll have to go back to work, that kind of thing. I mean, it's really life impactful. So it's much more intelligent to let the bubble, look at the data, understand the environment we're in. If you're gambling, do it with a percentage of the funds you can afford to lose. Have a cash out strategy in mind. And then, watch and wait, because the opportunities, because this is an extraordinarily historic bubble of all proportions, then that suggests that the opportunities will also be absolutely historic, again, for those who are prepared.
Danielle, thank you so much for chatting with us.
Hey, thanks, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Her website, jugglingdynamite.com. If you have any questions for Danielle or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.